The markets are slightly lower after news of the Syriza victory in Sunday's general election in Greece. Now here to break down the European uncertainty for U.S. investors is Ian Weiner, head of equity trading at Wedbush Securities, joining us from Los Angeles. And Ian, investors are still processing the news out of Greece, but how should they navigate the uncertainty in Europe?
Well, I think they should just focus on individual stocks. I think it's very difficult to handicap sort of what's going to happen. I think to the ECB action last week in terms of what they're going to do for quantitative easing, at least in the near term, should offset any concerns about Greece. It's clear that the second derivative of liquidity is going up, especially in Europe. So, I think that if you just continue to focus on individual stories, especially ones that have a lot of domestic exposure, I think are the way to go.
And are there any sectors you're looking at amid all of this uncertainty in Europe?
Well, I think that the consumer sector continues to be a bright spot. I think it should continue that way because as crude prices continue to remain under pressure, regardless of what people are saying about supply, it's clear that there is a benefit that's going to be happening and is happening to the U.S. consumer. And so it certainly seems like a lot of these companies have outperformed with most of the major indices near their highs and should continue to outperform.
All right, let's talk about the Federal Reserve. Their first meeting of the year is on Wednesday. Now, there's not much expected out of the FOMC this time around, but the Fed must be watching what's going on in Europe, right? I mean, with the ECB stimulus and the Syriza win in Greece, won't that make it harder for the Fed to raise rates this year?
Definitely. I mean, I don't see how the Fed can raise rates this year. The bottom line is there's absolutely no inflation. There's no wage growth, and now you have the rest of the world in a race to get rates to zero. And so, as the dollar continues to strengthen, it's going to continue to impact the U.S. And so, I'd be surprised if the Federal Reserve actually went ahead and raised rates this year.
All right. Now, this will also be a big week for earnings with over 140 companies on the S&P 500 reporting financial results. What's your take on earnings season so far, and anything that's on your radar in particular for this week?
Sure. I mean, I think earnings have been pretty disappointing so far. I mean, you've had virtually no year-over-year earnings growth, no year-over-year revenue growth, and the dollar and oil are currently, a big headwind for companies. So I think it's important to hear from some of the bigger multinationals to see sort of what they're seeing. But in general, it just feels like you're going to see more of the same, which is, you have weakness in Europe, you have some weakness in Asia, and people are going to continue to point to the U.S. as the only bright spot. But at some point, I think it gets overwhelmed by what's going on, and so I think you're going to continue to see earnings ratcheted down for fiscal year 15. And energy alone has caused quite a bit of damage, and I think there's already been $3 since the beginning of the year taken off of S&P earnings for the fiscal year.
All right, Ian, we'll leave it there. Ian Weiner, head of equity trading at Wedbush Securities, joining us from Los Angeles. Thanks for your time.
Thank you.
I'm Scott Gamm, and you're watching The Street.